This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. Scheduled auctions for this week are generally down on last year. Notably, there were none scheduled in Tasmania. New South Wales expects more than 600 auctions this week, 590 in Sydney, and that's up 8% on last year. Victoria's scheduled auctions are down 19% year on year, with 34 auctions planned in regional Victoria. Queensland should expect more than 200 auctions in the Sunshine State. Brisbane auctions, they're down 20% year on year. Adelaide, you can see you're expecting about 86 auctions there, and there's 32% less properties listed for auction this year than last. And in the ACT, Canberra, your auction numbers, they're down a bit too, with 62 scheduled for this week. Let's look at the most viewed properties going to auction this week. First up, we've got 7 Moringa Court, Nunawading. That's the original home of the Neighbours studio in Melbourne's outer eastern suburbs. This home has a price guide of up to $950,000. Next up, it's 12 Lorikeet Court on Victoria's Mornington Peninsula. This 4-bedder sits on about 700 square metres. Price guide is up to $760,000. Then we have 1620 Kangaloon Road in Kangaloon, New South Wales, which is pretty close to Bowral. This 7-bedroom family estate, it's set on a massive 30 acres and the whole house is built to look like a French chateau. And introducing a premier homestead estate in Byron Bay on 124 acres of rich farming land, showcasing hinterland and ocean views. It's the most viewed residential listing this week, and you'll see why. Just take a look at this. Experience celebrity living in the luxurious Spanish-style property called The Range. It's now available for $35 million. Located in Cooper's Chute, with 6 bedrooms, 8 bathrooms, and scenic views of Piccadilly Hill and the Pacific Ocean. This property includes additional residences for guests. Sustainability is at the core of its design, with recycled materials and a focus on outdoor entertainment. It features an infinity edge pool, we just saw that a second ago, a wood-fired oven and an amphitheatre-style fire pit. Guests can enjoy unique dining experiences, including a courtyard with an outdoor cinema and campsite dining in the grand amphitheatre-style fire pit. Just have a look at the finish here in the kitchen. The property address is in Piccadilly Road. And look, I caught up with REA Group's Paul Ryan earlier today, and we started out by discussing the amount of stock returning to Australia's property market.
2023 has actually started pretty solidly relative to the end of 2022. We've seen a number of new listings up 23% in February relative to January. We're seeing auction clearance rates hold up. We've got next week scheduled more auctions than we had in the same week last year. So the market's kicking off at a pretty solid pace.
Yeah, clearance rates holding up above 60%. Can you just put that in context for us? Like at the height of the pandemic, they got to some pretty high levels, but you know, how high is 60% really?
So 60% is about the auction clearance rates that we saw at the same time this year. Sorry, auction clearance rates of about 60% is what we saw this time last year, so before interest rates increased. So that's a pretty strong number. Now, it's not as high as we saw kind of in those heady days of late 2021, but that's still considered a number that is consistent with price growth, and that's what we saw in February. Prices were up.
Roughly how high did they get during that pandemic time?
Auction clearance rates got into high 70s, low 80s throughout the pandemic. That was a time where we saw lots and lots of buyers with big increases in borrowing capacity, kind of jumping at anything that came on the market.
But we have seen from this late last year around the 50% level. Now we're getting back up to 60 and potentially could go higher. But how much traffic are you getting on the REA Group website at the moment looking at properties?
So we're still seeing lots of buyers on the website. So we track buyers that we think are really close to buying property, and that's still up more than 40% on pre-pandemic levels. So what we're seeing at the moment is we're seeing lots of buyers still, more than there were before the pandemic, but with lower borrowing capacity, we're seeing prices fall over the past 9 months or so. And with interest rates increasing this week and maybe next month as well, it's likely that probably prices will slide a bit further just because of those constrained borrowing capacities.
Yeah, rates have obviously been lifted 10 consecutive times by the Reserve Bank. But are property sellers starting to feel a bit more confident again? Is that fair to say?
I think so. I think when you see that level of buyer demand, you see prices start to stabilise, as we saw in February. And you see the lack of stock on the market. It means that there's a bit of a buying frenzy for anything that does come on. And that gives sellers confidence that there's going to be competitive demand for their property. And hopefully that's what we see later in 2023.
Yes, so there was a little blip in the property price falls in February where they actually, interestingly, went up. But are you expecting the falls to remain throughout the rest of this year? Or?
That's our expectation. So that big decrease in borrowing capacity, as you said, 10 increases in interest rates from the Reserve Bank, and now maybe another 1 or 2 in the following months. That's reduced borrowing capacity by about a third. So that fundamentally has to flow through in prices to some extent. The big question is how much. How much does that 30% decrease in borrowing capacity flow through into lower prices? We don't think prices are going to fall 30% from peak to trough, but we do think that there's still going to be some more adjustment in prices over this year.
Yeah, and we saw some lending stats from the ABS recently, which showed the number of first home buyers in January fell to its lowest level since 2017. And I guess a lot of that is due to that steep increase in interest rates.
Yeah, we know first home buyers are in particular affected by lower borrowing capacity. They tend to borrow, 80% of a property's value. But we're still seeing quite strong lending numbers, really. Lending has come off a lot, but the level of lending is still really high, still above pre-pandemic levels. So that's consistent with this strong housing market activity, and hopefully that continues this year.
And just on that activity, what about the rental market? How hot is that right now?
The rental market is kind of the big story of this year's property market. One great stat that we've got is that before the pandemic, roughly 43% of available rentals were priced below $400 a week. Now that's less than 18%. So
wow.
In particular, anyone on low incomes or government support is finding it really, really tough to find a new rental at the moment.
Yeah, what sort of traffic are you getting on flatmates.com?
Oh, that's increased enormously. So we saw throughout the pandemic, one of the big changes was that no one wanted to live in share houses, obviously with lockdowns. And that's come back in a big way. And part of that is because cities are back in a big way. And part of that's because of affordability issues. Rentals are going up in price by around 10% a year. That's pushing people to live in bigger groups.
Yeah, we seem to be seeing stories every week now of rents being increased $100, $200, $300 per week. It just feels like it might be a little bit unsustainable.
Yeah, and unfortunately, it's going to keep increasing this year. I mean, rental vacancy rates are incredibly low. Those are consistent with really strong price rises over the rest of this year. So it's going to remain really tough, and we just need more rental stock to come onto the market, and that's going to take a while.
So when's the end in sight for this? Is it some point in the future next year? Or?
Yeah, I wish I knew. I think the rental market is going to continue to be really tough for anyone out there. We can't see that changing in the next 6 months or so, unfortunately.
Well, Paul Ryan, thanks so much for your time.
Thanks very much.